Imagine a world where your money is digital, controlled by your central bank, and available at the tap of a button. That world is here, and it's called central bank digital currencies, or CBDCs. These digital forms of national currency are not just a futuristic concept, they are reshaping global finance right now. Did you know that over 130 countries are exploring or developing CBDCs? That's more than half of all central banks worldwide. In this video, we'll dive into what CBDCs are, how they work, and why they matter to you. Whether you're an investor, a business owner, or just curious about the future of money, understanding CBDCs is crucial. So, let's get started. First, let's break down what CBDCs actually are. Unlike cryptocurrencies like Bitcoin, which are decentralized and volatile, CBDCs are digital versions of a country's fiat currency, issued and regulated by the central bank. Think of them as digital cash. China's digital yuan, for example, is already being tested in several cities, allowing users to make payments via a smartphone app. This isn't just a tech upgrade, it's a fundamental shift in how money moves. CBDCs promise faster transactions, lower costs, and greater financial inclusion, especially for the unbanked. But they also raise questions about privacy and government control. As we explore these implications, it's clear that CBDCs are more than just a new form of money, they are a new way of thinking about finance. Now, let's look at how CBDCs could impact global finance. One major effect is on cross-border payments. Currently, sending money internationally can take days and incur hefty fees. With CBDCs, transactions could be instant and nearly free. The Bank for International Settlements is already working on projects to enable CBDC interoperability between countries. Imagine paying for goods from another country as easily as sending a text. This could revolutionize trade and remittances, making global commerce more efficient. However, it also means central banks will have unprecedented insight into financial flows, which could be a double-edged sword for privacy advocates. Another critical aspect is financial stability. CBDCs could provide central banks with new tools to manage the economy. During a crisis, they could directly inject digital cash into citizens' accounts, bypassing traditional banking channels. This was highlighted during the COVID-19 pandemic, when stimulus checks were delayed. With CBDCs, such responses could be immediate. However, this power also comes with risks. If people rush to convert their bank deposits into CBDCs during a bank run, it could destabilize the financial system. Balancing these risks and benefits is a key challenge for policymakers. Finally, let's consider the geopolitical implications. As countries develop their own CBDCs, they are also competing for influence. China's digital yuan, for instance, is part of its strategy to reduce reliance on the US dollar in international trade. If widely adopted, it could challenge the dollar's dominance, reshaping global economic power dynamics. Meanwhile, the European Central Bank is exploring a digital euro to maintain the euro's relevance. This race to digitize currency is not just about technology, it's about economic sovereignty and global influence. In summary, central bank digital currencies are transforming the financial landscape by offering faster, cheaper, and more inclusive transactions. They promise to revolutionize cross-border payments, enhance financial stability, and shift geopolitical power. However, they also pose challenges related to privacy, financial stability, and international relations. As CBDCs continue to evolve, staying informed is key to understanding their impact on your financial future. If you found this video insightful, hit that like button and subscribe for more deep dives into the future of finance. And don't forget to share your thoughts in the comments. How do you think CBDCs will change the way we use money? Thanks for watching, and see you in the next one.